If you clicked on this video, you can agree with the statement that trading is overcomplicated. And sure, all of these concepts can make you profitable and many of them are quite interesting. But how many of these concepts do you actually need in order to create a trading plan? And the answer is simply one. Yes, all you need is one concept. And that one concept is simply candle range theory or CRT. Whether you trade any of these concepts, whether it be support and resistance, ICT, supply and demand, Wyckoff accumulation and distribution, trading patterns, or Fibonacci, whatever it may be, this one concept is so vital to add into your trading plan. You guys will see it makes a day and night difference. It could be the difference between making or breaking your trades. In this video, I will teach you the key to becoming profitable. If you can predict the next candle correctly and you know where market is headed, it becomes very easy to catch those moves in the market. So let's get straight into the video. Now, this is the basics of our CRT, our candle range theory. Now, we all understand a candle is a range. Within this one candle, if this candle was a daily candle, for example, we understand on the lower time frame, price opens from this point right here. We may get price move around until we come to the low of the candle. Here's where we form the low. Before market comes, rallies up all the way to the high of the candle before we come back to the close of the candle. This is something most of you guys should understand. If you've ever heard of open of the candle, low of the candle, close of the candle, and high of the candle. This is what it simply means. And on a lower time frame, this is something it would look like. I'm sure you guys can imagine. Most of you guys have probably realized if you hop from a lower time frame to a higher time frame, all this market structure condenses into one single candle. Now, why am I telling you this? How is this actually going to benefit you? If you understand liquidity, there is a significant area of liquidity above and below candle highs and lows. Now, especially if this is something like a daily candle, again, there's significant areas of liquidity above and below the previous day high and the previous day low. In addition, if we understand that there could be a PD array above this candle high right here, such as a fair value gap, an order block, so and so, a breaker block, a rejection block, whatever it may be, there could be a PD array which market could be coming to fill before reversing. So simply understanding the range of a candle and seeing how market respects or disrespects the range can frame your bias and direction in market. So let me show you guys a couple examples of what I mean. Now, to start off, understanding that CRT can happen within one candle, two candles, and three candles is vital. Also understanding where the manipulation, accumulation, and distribution is. Within one candle, you can get the power of three. So let me show you guys. Here is the open of the candle. We open, market may consolidate, and we get a manipulation below the opening price all the way to the low of the candle, where market comes, distributes all the way up to the high of the candle before we get the close. Again, on two candles, it is the exact same thing. Here we have our initial bearish candle where we have the open and we have the close of the candle and we also have the high. Here is the high and you can see second candle opens right here. We have market come, accumulate, manipulate above not only the opening price but also above the high of this candle before market distributes all the way down, all the way to the low of the candle. So we manipulate to the upside and we come take the liquidity to the downside as well. Again, free candle formation. Now I will be focusing on the free candle formation in today's video as it is the most clear, as we have a candle for accumulation, manipulation, and distribution. So here we have our candle range right here within this candle where market comes, we get our accumulation from this candle, whether it may be market forming liquidity here. We have market come, manipulate this high right here before coming and getting a distribution. Now we also do have a minor manipulation right here where we do manipulate above the opening price right here where there could have been more liquidity before getting that distribution. Now, if I asked you within all these three candles, where is the best place to enter? Most of you would say, well, there is no entry within these candles. There is no clear entry. However, within every candle, the best place to enter is within the manipulation. You guys should already know this from the power of three. So as I said, the manipulation within this candle happens below the opening price. So the best place to enter is off this wick right here. Within here, the manipulation happens above this high. So the best place to enter is above this high. With this free candle formation, there's two manipulations. The initial one right here, this is the best place to enter, or you could have caught a re-entry right here where if you hopped onto a lower time frame, there could have been a PD array, or there could have also been a PD array which you could have entered off here. So I hope you guys are seeing how this really works and how you can really implement it into your market. Now let's look at the two main scenarios that will happen within the candle range theory. We have the open of the candle, the close of the candle, the high of the candle, where the second candle opens. we come above the opening price and we manipulate the high of the candle. Now, from here, what do you assume market is going to do next? We've had a bullish candle to then where we've had a bearish candle sweeping the high. And the obvious answer is this is very, very clearly a sweep on liquidity. How do we know this? Firstly, we have market sweep this liquidity, but we also get body closure within our candle range. We don't have market being comfortable above this high, but we are getting body closure above this high right here. From here, I'm going to assume market is going to come to the next point of liquidity, which is our candle range low, and ultimately this larger range of liquidity, which is this candle range low as well. So if I play out the next candle, you can see we do very clearly take out this area of liquidity before coming and taking this area of liquidity too. This is very clearly just a sweep on liquidity, however, in a free candle formation. We come manipulate above price, so you could have entered here one. Again, we manipulate price above the opening price right here. If market was to consolidate, as I said, come to here, maybe a fair value gap, an order block, before distributing down to this point of liquidity. Now, within this scenario, we have a bullish initial candle where we have the high and the low. Now, market comes, we close, and we instantly get a second bullish candle, which we close above this high. We have body closure above this high. What does this tell me? Firstly, it tells me market's comfortable above this high. And secondly, it tells me it is a continuation. It is a run on liquidity rather than a sweep of liquidity. Just seeing how market is comfortable above this high and we have two bearish candles, the likely scenario is market is going to print a third bullish candle. Again, where is the best place to enter? At the manipulation. We have a manipulation right here below this price. Price comes down, possibly tapping into a fair value gap or order block before pushing higher, where it happens again. Price comes down, we get a manipulation below the opening price where we could have tapped into another PD array before moving upwards. Now here's a quick test for you guys. I want you guys to predict what you think the next candle will do from these two examples. So quickly pause the video and think about what your answer is. Now this should have been very easy for you guys. In the first example, simply we've swept the low and we've had body closure within the zone, as well as a bullish candle, which shows us market does want to move up. And as you guys can see, this second candle closes above this wick right here, and we end up taking the high. So you should have predicted the next candle would be bullish, aiming for this point of liquidity up here. And where would you enter in this example? At firstly, this manipulation below this low, and at this manipulation right here. As for the second example, as you guys can see, we sweep below the low. However, we do have an indecision candle right here, where we do have the next candle open, and we get body closure above this candle right here. To there, where we get a wick closure above the high. However, as you guys can see, the next candle is bullish. And what can you see happen is that market gets body closure above this wick, to then which we get a continuation not only above this point of liquidity, but this point of liquidity as well. All right, firstly, I'm going to be showing you a trade which actually passed my phase 1 on my prop firm challenge. And I also sent it out to the VIP room as shown here for the members to profit off. Now, while the trade was fairly small, the concepts I used and all the knowledge of CRT, liquidity, which I really used to catch this trade, really shows why it was high probability and it was such a great trade. So to start off, firstly, we have equal lows right here where market comes. We see market sweeping below. We can also see market running above this high right here. If I hop onto the weekly time frame, you can see we get a rejection block above this high where market is not comfortable above the high. However, we seem to be sweeping the high. We'll get one bullish candle, next candle straight bearish. So back onto the daily time frame, we see market sweep these lows right here, these equal lows, and we can see market is moving towards this order block right here. So if I play out the next candle and the next candle, you can see we got our initial tap in. Let me just replay and move to the 4-hour time frame. So now playing out the next few candles, you can see we do form a little bit more liquidity right here. And let me just move back the candle. And as you guys can see, we get this initial tap into the order block, which any early buyers or anyone who doesn't have a strong understanding of CRT may have got stopped out in this trade, as there would be possibly stop loss below the low, trying to enter off this order block. However, they don't understand the next move of the market, which is using this candle's range as liquidity, especially within a PD array, to catch out those early buyers. So if I play out the next candle, that's exactly what market does. If you try to catch an early buy here, you would have got stopped out. This is why it's so important to understand CRT. I also do understand the best place to enter is the manipulation. And where is our manipulation? At the sweep of this low. Just to make it clearer, let me hop onto the 45-minute time frame, where you can see we get the initial tap in, sweep below, body closure in, and we have the third candle start to make a move upwards. So if I could catch an entry somewhere here below the sweep of liquidity, that would be perfect. Now, I caught my entry on the 1 minute as it was the most refined and clearest order block out there. So simply as so, I saw market come, we form this area of demand or order block, whatever you'd like to call it. And you could see market was forming some relative lows, which we had market take out, formed this low, which to which if I play out market, you can see we do end up taking out before getting that tap in. However, before that tap in, I actually sent the alert to the group for them to enter on this trade. Simply entry at the order block as shown right here. Stop loss was quite tight. We placed it just below this low at 3.8 pips. Below this low right here, sorry. And targeting a simple 1 to 2. Now, I was over leveraging on this trade. However, I had confidence due to all my confluences and I wanted to pass my challenge, which I did. So if I play out the trade, you can simply see we do hit the 1 to 2 very quickly. Implementing the CRT, the candle range theory, simply saved me from losing out on this trade. With a good understanding of CRT, I understood where the manipulation was, where the liquidity was, which allowed me to catch the real move towards the upside rather than getting stopped out, which a lot of you guys do have a problem with. As you guys always tell me, I always end up getting stopped out on my trades. On to our second example on EURUSD again. Now, if I play out market, you can see we do form a fair value gap right here. Firstly, we do have this fair value gap. However, we do get another fair value gap right here. So we bring this up here and this ends up becoming our breakaway gap where we displace above this high to the upside. So this is our POI. This is our area that we are focusing for market to come in, hopefully to move upwards from. So if I play out the next few candles, you can see we do get market playing within our zone. So we have this low formed in roughly at the 50% of our fair value gap. Now, if I play out the next candle, what you'll see is we get a manipulation below this low right here. Now, as we know, the best place to enter is at the manipulation. If I drop down to a lower time frame, such as the 15-minute, lo and behold, what do we see? It nearly marks out our order block perfectly. So from here, simply all I will do is place my limit order, my buy, stop loss below the low, and targeting a point of liquidity such as this high. If I end up playing at the trade, you can see we do get a very perfect entry before our move to the upside. Just as such, and as you can see, market does end up playing a bit more. However, we do get a very respectable 1 to 4. Now, I'm sure a lot of you are guilty of this, where most of you guys would have marked out the 50% of the fair value gap, entered, stop loss at the low of the fair value gap, and possibly targeting a point of liquidity somewhere. Now, most of you, as you can see in this example, you may have actually caught the trade. However, if you were targeting, say, this high, for example, or another point of liquidity, you would have got stopped out. But as you guys can see, the understanding of CRT, where market comes below this low, sweeps, we get an entry below the manipulation or below the opening price, sorry, which is the manipulation, and we get our move to the upside. Trading really doesn't have to be difficult. I just showed you guys in this video how you can simply use a drawn liquidity or candle range theory in order to not get tricked out, in order to not get stopped out, and actually let your trades play through. Now, if you are trading on a demo, or if you are wasting time trying to get yourself funded, there's no point of watching of any of these videos. There's no point of trading, as the whole point of trading is to make money. Get funded today. Click the link in the description. Me and my team will get you funded, guaranteed. Now, if you want to know more, details of how we pass clients FTMOs, ACGs, whatever prop firm you may be with, make sure you guys drop me a message on Telegram. The link is in the description. Thank you guys so much for watching, and I hope to see you guys funded. See you guys next time.